De presentatie zal hier in het Engels worden opgevoerd door Markus Herfert. En zijn presentatie gaat over opties en hoe u op een simpele en efficiënte manier een maandelijkse cashflow kan genereren. Een kleine introductie van Markus. Hij is een Duitse bedrijfspsycholoog en ook optiecoach. Hij woont in Nederland, in Amsterdam. En zijn optiecoach wordt uitgevoerd of wordt geanalyseerd door Freedom by Option Trading. Hij helpt dus mensen om een passief inkomen te genereren, zowel door opties en aandelen. En hij maakt jullie ook wegwijs op de Zero DTE opties en de Europese opties. Ik ga aan Markus. Markus, ben je al aanwezig? Are you already here in the presentation? Can you unmute yourself and activate your webcam, please?
Definitely.
Hi.
Good
Hi,
morning,
Markus.
everybody.
Good morning. So I do not know if you understand or if you understood something about my introduction in Dutch. I suppose so. So I will give you now the image to present your screen, and then you can start with your presentation.
Perfect. That works. Thanks a lot.
You're welcome.
And yeah, welcome everybody to my parts today. Also a few words about myself. Yes, so this presentation will be in English, as already said. And I currently live in Amsterdam, as also part of my introduction. So ik spreek een beetje Nederlands. I live in Amsterdam South already for 5 years. But as you may know, Amsterdam is not the Netherlands in general. So there's a lot of English-speaking going around, and that's why that makes me so easy not to learn Dutch, even if it's so easy when you speak German, when you speak English, to learn Dutch. So I was already there in a Dutch course, but still ik spreek een beetje Nederlands, and that's why this presentation is in English. And thanks a lot for joining today. Also along the presentation today, I also want to encourage you to keep this as much as interactive. So yeah, feel free to use the chat functionality. Also then, Evelyn, right? Feel free to interrupt me when there's a question in the chat, so we can really tackle this right away whenever it comes up. Good. So let's give it a start. I will also not give this presentation here with these slides, but I also wanted to jump into a technical analysis tool and also to show you an insight of one of my options trading portfolios into one of my accounts, to really also show you fully transparent how different positions that I opened recently currently perform. Those that perform well, but also those that doesn't perform well, to give you really a good insight into what this is about. So let's give it a start. How to enjoy a simple and predictable monthly income. I always start with the statement that I would like to support solving the 2 biggest problems that we are having on the stock market. So the next 60 minutes is exactly about these 2 biggest problems that everybody, in my perspective, is facing at the stock market. So watch out. What are these 2 problems that we are about to solve? The first one is about the fact that most people do not really notice, even when they invest at the stock market, that you constantly have a cash outflow, that you invest into a share, that you invest into a fund, that you invest into an ETF. And every time when you invest, your cash is flowing out of your pocket. It feels good because you are investing and you expect the invested asset to grow and to raise. But in the first instance, you cannot be independent, you cannot be free, because you don't have the cash what you need to live an independent life. So in that sense, that is the first aspect. We want to solve the fact that we have a directly cash inflow, what we can generate with options, instead of creating a cash outflow, what we have with investing in shares, in funds, in ETF, in crypto, in whatever. So that is the first thing that we are solving. And the second one is, every time, you will know this, of course, when you invest into something, you expect the share price to rise. That is the main perspective. Or if you short in assets, maybe you already have done this also, that you expect the price to fall, and then you can also open a short position. But most people, I expect also 90% of those who are here, are happy when the prices are going upwards, and yeah, that you expect the stock price or whatever to raise. And in our strategies, we do not need this to raise. Even if we expect the price to raise, we can also win if it just goes sideways, or even if it slightly falls. So even this is okay. If we open the position and we expect the share price to rise, we also win when it even slightly falls. And that is what also, yeah, opens the eye of a lot of people when starting with options, because a lot of people think this is gambling and this is heavily risky. But we always trade options with a hedging position, also something I will give you an insight to, so that this options trading aspect is really coming more and more in Europe. And that's also why I'm super happy to be invited here to this Bull and Bear event. So let's give it a start, and to give you an insight into what is expecting you today. So first of all, I always, as you know, I'm a business psychologist. I always wanted to start with a why. Why do we do this? Not just to start with it, but also to keep doing it. Because most people start and start and start and start and feel good that they are starting something new, which sounds super interesting or fascinating. But then the next shiny object is coming, and you do not keep going with the same aspect. So that's why I wanted to give you the aspect, why do we start? And also, why should this be something that we keep on doing? And that's the 3 lifestyle level I wanted to introduce to you. The next one is a pulse check. How does the current stock market stand, and what can we expect for the future months? Then, of course, I would like to introduce it to the options trading world, to show you buy and sell signals that we recently got. So what is our entry, and also what is our exit level into specific positions? And also, as indicated, I would like to show you an insight into one of my options trading real money accounts. So let's give it a start first with the 3 levels of lifestyle. So here are 3 different points in the ladder of where you can be. And of course, we are starting with level 1, and that's where most people are. So they work for an income which comes from a job or which comes from a business, and they are spending full of the money for their lifestyle, which is the rent, which is holidays, which is clothes, which is luxury elements, whatever, lifestyle parts, and the full money is gone after the months. So there's nothing of investment. Most people are, I hope 100% of you who are here, in level 2 or even in level 3. So level 2 is about those who also gain money from job or business and then invest in lifestyle plus the investments. So you invest every time a part, hopefully directly at the first day of the month or in the first days of the month, and not just what is remaining at the end of the month, so that you always have a constant amount that you are investing every month. But this is not the end of the ideal ladder. The level 3 is the one that I assume most of you also wanted to get to, so that we are generating a monthly inflow which is paying us our lifestyle. So that this does not have to do with active work, but something that we prepared for, that we generate our cash cows, that we generate different income streams, where definitely options are one of those. And here we are having then the way to monetize our lifestyle because of our income streams. So that's the level 3, I think most of us, most of you who are listening wants to get to. All right. So I think that is clear. That is one part of the why, that the monthly cash flow is definitely something which is the driver to financial independence, because otherwise we cannot really get financial independent if we always need to have an active work that we are spending. Yeah, before we start into further topics and also into the current market situation, I also wanted to give you an insight. Who am I? Who am I to be ready to talk to you about this topic? So my name is Markus. I'm 36 years. I'm German, as already mentioned, currently living in Amsterdam for a bit more than 5 years. Came to Amsterdam in January 2020, a few months before COVID hit all of us. And I'm a founding member of a company called Miele X. I assume 99% of you will know Miele, the household appliance manufacturer, washing machines, vacuum cleaners, ovens. So Miele, the premium household appliance manufacturer, I was working for them for 16 years and had the opportunity to open a startup in Amsterdam South. And this is a fully digital company for online marketing, for digital sales, and also for online analytics. So all the analytics functionalities about digital footprints. And I was employee number 3 and had the chance to open and build this company to more than 200 people in more than 3 years, in approx 3 years. And after that, where I really put all my effort in, all my blood, sweat, and a lot of time, I noticed, hey, now I know how to build a business, and now I really want to build a business that's really suiting me, and I want to support people with income streams that I learned myself from starting more than 10 years ago about all these options trading income streams. And now I really want to support others and want to build my own to train and introduce this topic to more and more people. And now even in the Netherlands, what is really making me glad. So that about me. As already mentioned, I'm German. I was raised in the area of Dortmund, Münster. I think a lot of Dutch people also know Münster, and traveling to it also, especially for the Christmas markets. And so I came to Amsterdam 5 years ago and also live there with my wife. I'm a business psychologist. That's why I know this perfect balance between how people act and think, and also the financial relation to it, to the financial market, but also related to the economy. I generate a high 4-digit income because of options, so several thousand euros because of these strategies, where I will also introduce them to you today. But all in all, I'm invested in almost 10 different investments, which is, for instance, gold, silver, different investments in commodities, but also real estate, but also in crypto, but also NFT, stock market, of course. So really quite a large variety where I act, but really options is the number one thing that I put my focus on. So that a bit about me. These are some recent magazine articles where I also regularly am asked for. This is for the Trader VP magazine, Trader Work Hard, Play Hard. This is a German-speaking magazine. Trader Fox is the partner here who regularly asked me to provide an article. But also here the Traders magazine, they also host the World of Trading conference, which always happens in November, also November next year, where I will also be and act as a public speaker, and sometimes with my own articles, but as mentioned, in German. And also here I was asked from the German stock exchange in Frankfurt for an interview for Wirtschaft TV, so Economy TV, to also speak about these innovative options trading strategies that I was happy to talk about. All right, let us start with one interactive aspect, and I would like to ask all of you to put in the chat, where do you think the stock market, for instance in the US, is heading to in the next 3 months? Please put a 3 in it if you expect it to go upwards. please put a 2 into it if you expect it to go sideways, and please put a 1 in the chat if you expect it to go downwards, so if it's about to fall. And then I can check the chat about the fact what you are putting in.
Do you see the chat?
I think I see it limited. I see one person with
I see
a 1.
most of the time ones.
Most of the time ones. Interesting. So the 1 is definitely that the prices
Ones
are
are
about to
coming in.
fall. Okay, so the 1 is definitely leading further on.
Now
It's
they're
still the
coming.
same.
Yeah, some are thinking they're going down.
Okay, so that's definitely the favorite that people expected to fall. Okay, all right. Thanks a lot for joining. Thanks a lot for putting your answers in. And that is exactly one of the best variations, of course, or one of the best support that I can get for everything that comes, because most people are only prepared to make gains at the stock market if the stock market is really about to rise. And in that situation, or as you all noticed, or as you all given your answers yourself, in our short poll here, in our quick poll that we've done together, most people expect the stock market not even to go sideways, but even to fall in the next 3 months. This means if you are only invested long in positions, which means that you are holding shares, that you are holding ETFs, that you are holding investment funds, you cannot expect to gain money in the next 3 months. Is this something you are fine with? I don't want you to put now a statement in the chat, but I assume 100% of you would say no. Of course, in the next 3 months, I wanted to gain money from my investments. So this means we need alternatives. We also need chances. We need opportunities to make money, to gain ideally directly paid cash flow if the stock market is not rising. And especially in the shorter time view or in the mid time view, for instance, over 6 months, over 1 year, of course, we wanted to make benefit and to profit from our investments at the stock market. Later, when I come to my technical analysis tool, I will also show you one stock that I was recently finding and also talking about, where you would not have made any profit over 12 months because it was constantly going upwards, downwards, for a full year. I think it was 14 months where the stock was quite volatile, and we always had the chance to go with the flow and to really make directly paid options income. But if you would have invested directly in this share, you would have made 0 win because it is just going sideways, but quite volatile. So thanks a lot for that. I think the need to have alternatives was now super clear. And you also noticed that we should not be only invested in long positions, but have the chance to also work with protected strategies, with hedged strategies, which I will introduce to you. But quickly, before we start with options, as mentioned, I also wanted to give you a bit of proof why a lot of people who now said a 1, which means that the stock market could fall, I think could be on the right side. We, of course, all do not know this. Also, Warren Buffett said in his last shareholder conference, I think it was 1 month ago, Warren Buffett, one of the biggest investor, iconic persons, said he does not know where the stock market is going to. We just can react and anticipate. But of course, we wanted to make predictions because of technical analysis and because of all the statistics that we know from the past. The past is not the best indicator for the future, but it is at least something. So the only thing that we can do is to base this on numbers, ideally not on gut feeling, but ideally, of course, on numbers. And this means, of course, we just have numbers from the past. So that's what we can take. So if we take a look here at this so-called Shiller price earnings ratio, maybe some of you know this. This is a publicly available chart for the S&P 500, so the Standard & Poor's 500 stock exchange in the US. And this means that this indicator here shows how much overvalued the stock market is related to all the earnings that the companies within these 500 in this stock market, which holds these biggest 500 stocks in the US, are generating. So the price is how much value does the stocks have, and the earnings means how much balanced is this price that the shares are having related to the earnings that the companies are making. Which means the higher this ratio here, for instance, here in the approx 2000, where the dot-com bubble was exploding, or here latest in November 2021, when then also the numbers were at 38, which means that the prices of the companies at the stock market are 38 times as high as the earnings who are representing this. And this number here in November 2021 was as high that it afterwards was coming down again. As you can see here, November 2021 was a peak, and then it was really coming down. And on the right side, I put the picture to what extent. So it was coming down from November 21 to October 22, which means almost a full year, by 24%, which means everybody who just knows how to benefit when the stocks are rising would not have made any benefit in one full year. And currently, on the 4th or on the 1st of April, we have been almost at the same level and now came down. And now, of course, there's a big question: do we get again into such a long-term decrease at the stock market that almost 1 year of falling stock market is about to come, or of course longer? I do not want to talk about thunderstorms at the market. Of course, currently, especially also with looking at the earnings season, where every company was announcing about their earnings, about their turnover, about their outlook, was quite positive. I think about 72% of the companies were achieving results above expectations. So that is a positive indicator. Currently also the economy in the US is super stable, but of course the risks are summing up, especially with the tariffs, especially with the increase of prices. So all these risks, also globally, the conflicts are increasing. So that's why we need to watch out about big long-term long invests. So we always need to be we always need to have an eye on the shorter terms, and that's what this is about today. All right, talked about the Shiller price earnings ratio, which is again quite high related to where we've been before in former years. Another newsletter that I get is from the Market Ear, which is about a statement from the Goldman Sachs Bank, and they said that they are expecting for the Q2, and this was even before Trump was talking about his tariffs, that the S&P 500 in the US is about to decline by 5%. So they were even if they are selling investment funds, for instance, to investors, not making advertisement for themselves, but communicating that they expect a decrease, what of course in a sense does not make much sense, because they are in their DNA, it is to find something that the market should go upwards to make sure that they can also sell their investment fund products. But in here, I also discussed this with an investment fund analyst with whom I'm working, and he said in general banks are not doing this. They are even forced from their internal regulations to come up with a positive yearly statement, for instance, because hey, you cannot talk to the investors and say this year you will lose. So in that sense, this was already quite a warn signal from the S&P 500 for the Q2. Yeah, and now I wanted to really make the move more and more to the world of options. Now, after I told you about the 3 investment types, why is it required not just to live from what you get from your job, from your business, and then fully live for your lifestyle, but ideally, of course, to have a recurring cash flow and yeah, live your lifestyle from not active jobs. And the second, you also indicated yourself, we cannot expect just rising stock markets. We need alternatives, and these alternatives ideally, of course, was not that much effort, was not that much time that you invest in these strategies. And today I want to show you 2 strategies that are about options. So every time when I start introducing options, I want to make it super easy. So in a sense, my claims are I wanted to have fun and I wanted to make money with investing at the stock market. So I do not want to overcomplicate. I do not want to jump into complex calculations. I do not want to jump into, how is this calculated to come to this technical indicator? Sorry, I don't care. I wanted to understand what this indicator is about. How is it helping me? But I don't want to jump into mathematics, how this calculator is made, because I wanted to have it simple and I wanted to help it myself. And I think that you could be the same, that you don't want to overcomplicate. You wanted to help, you wanted to have tools that help you, and you don't want to dig into deep that is not benefiting. Same as for instance, a car. Most people don't know how a motor, how the engine is functioning, how the fuel is compressed, how it's heated up, how it's exploding to make sure that the car is running, or how the gears are functioning. We all ride a car, but we don't know how everything is functioning with engines or with gears. And with the stock market, it's the same. We need to have an understanding of how this is functioning, but we don't need to overcomplicate if it's not benefiting us. So talking about options, I always start with talking about the fact, do you actually know how many insurance policies you have? So this is something that I always like to relate this to. And now you may come up with all the insurances that you hold. You have a personal insurance, you may have a household insurance, you may have a car insurance, you may have a fire insurance for your house, you may have a doctor's insurance, that you have a personal benefit when you are in the hospital. You may have a tooth additional insurance. So you may have different insurances, maybe between 5 and 10, maybe even more than 10. And the next one is that I always wanted to continue with, how often do you make use of these insurances? And you can, of course, see this from the perspective, ideally not often, because this means that nothing happened. But also, if you did not make much use of these insurances, it means you are paying for no, how can I say that? No performance in the back. So you paid for any artificial risk, for any artificial happening that could come up, but for years and years and years, you're paying for something where never something happens, because you are protecting yourself for what you are paying. So you are paying for security, you are paying for protection, even if it may be super artificial. And the same thing, that you are extremely rarely using your insurances, we are reflecting to the stock market. So when we are trading options, when we are using options at the stock market, we super much like to sell those, because 80 to 90% of those options that we are selling are gaining profits, are gaining values for us, because we have done our homework, we have done our technical analysis, and we know what the stock market could much likely do. Of course, there are never guarantees at the stock market. But with that, we can start to sell a security to somebody. We can sell an insurance to somebody that if something heavily happens, we are the insurance. But of course, we are nobody who wants to take big risks. And that's why we always also buy our insurance back. And that is something I will show you into more deep in the next minutes. But first of all, I think it's clear and it's easy that we work with insurances. We wanted to protect somebody else at the stock market for happenings that the other person, that the other party does not want. And we've done our homework that this happening is super unlikely. Good. Then let's move this even further. Please imagine that there is Jack, and Jack is somebody who holds Apple shares. And Jack is now a bit worried because Trump is attacking Apple, is attacking them to move the production to the US, the production that is currently in China. And yeah, Jack wants to protect himself for his Apple shares that he is holding. And then there is John. And John, for instance, could be you or Johnina or whoever, whatever fits your gender. And John is now somebody who could say, hey, I've done my technical analysis. The Apple share is about to rise, just as one example. And I've also noticed, hey, Apple invested already 1 billion in moving to in moving the full production line to the US. And that means that the risk is off. There is not much of the risk that you think you have. And I'm offering you an insurance for your Apple shares, just as an example. And in that sense, John could say, hey, here is the insurance, and Jack buys now an option from John. And an option just means that it is an agreement. It is no direct flow of any shares. It is just an agreement that if something happens, a result is happening. And the same is happening with your car insurance. Of course, with a car insurance, your insurance company does not need to buy the car, does not need to buy any cars. It is just an agreement that with your with the things you own, if something happens, that there is an agreement that an insurance is there. And the same is happening with our options. So that that Jack on the left side says, I get an insurance from you. This means I pay you an insurance premium, which is directly paid. And I think you can also reflect this with your own knowledge that every time that when you invest into an insurance, the insurance company is getting the money right away. So the same is here. And that is already the first problem that we are solving at the stock market. We don't have a cash outflow. We don't pay into a share, into an ETF, into a crypto, whatever, but we have a directly cash inflow. So the money is directly flowing into our pocket or here into the pocket from John, because he is selling an option, he is selling an insurance, and the money flows directly. And the best thing is that John or you could define all the conditions yourself. So you could say, when do you want to do this? Maybe now it's too blurry. You are not really sure if this is easy to calculate what will happen. Maybe I start this in 2 weeks or in 2 months. It's up to you when you want to start this. Then also how you want to do this. So for how long is definable from you. You can say, I wanted to do this just for 7 days, or I wanted to do this for 2 months, or I wanted to do this for a full year. This is fully up to you how long this insurance should go. And also super relevant for the stock market, you define the distance to the current stock price. If the stock price from Apple is currently at 220 or so, or 160, I don't know, you could define whenever the stock price goes at 120 or at 100, I want to protect somebody. And all the way to this level that you define yourself is out of range. You just define the level where this insurance is starting, and this is fully up to you. So as an insurance giver at the stock market, you define all the positions when selling an insurance for which you are getting the investment premium or the insurance premium. Yeah, and other than that, it's also important that this option is, as already said, no direct flow of shares, no direct flow of anything else than an agreement. So it's just a contract. It is just an agreement between two parties which is limited in time. So after this agreement is over, after the time was running out, you just made your money like every other security or insurance company, and there was no happening, there was no insurance case that happened, and in that case you just made money without any any situation where you needed to pay for. Yes, and other than that, what is super important, because a lot of people always ask me, what can I do with these options, on which underlyings, on which elements can I do this, can I trade this? And of course, mainly equities, which means really stocks. So you can use several different stocks where options are relevant, because what is always also important, the stock needs to be relevant to be insured. So all the tech stocks which are quite volatile, which are quite much moving, are relevant for protecting themselves, and a lot of stocks which are not moving much, of course there's not much that that protection risk or that protection need, and in that sense some are not even possible to trade options for, and others you do not make really much money. So on Coca-Cola, for instance, you can sell in options for, but you will not get much refund, much options premium, much insurance premium, because Coca-Cola is not moving much. But other than that, you can also do this on commodities, on gold, on silver, on oil. You can also do this even on crypto ETFs, on the Bitcoin ETF, if this is interesting for you, and also on currencies. And what is also important, it has nothing to do with warrants. So warrants is something you can only buy from a bank, which is also a good indicator that on the selling point, you are way more profitable, you are way more on the winner side, because way more cases, as mentioned, 80 to 90% are those who are just expiring without any need for these insurances. And that's why we are on the selling part way more benefiting than the ones on the buying part, because on the buying part you always need to be right. So Jack really needs to have now heavy falling prices on the Apple stock, that really this option was relevant for him. Otherwise it was just a protection without any need. And that's why we have way more chances to win, because all the other stock price directions are for us winning positions, and just if the Apple share is falling heavily, we are losing. All right, that to start this with, and now I wanted to move over to how we find the right times, because my perception or my perception and my perspective is that we always should find a good spot to start a position and a good spot to stop a position, to exit a position, but we will never find a perfect time to start and to end a position. But it is definitely already good if we start with a good position. And here we have created and coded our own buy and sell indicator. And this is, for instance, here a buy signal with a meta stock, and this is a sell signal with the meta stock. And ideally, of course, after we got a buy signal, the stock price is really moving into the direction that we anticipated, and after a sell signal, it should be the same. And of course, you can now use this indicator that you can also find on my website, on markusherfert.com, that you just start into a direct investment position, that you say, hey, I now have a buy signal with a meta stock, for instance, here at the level of 460, and now I have the sell signal with the meta stock at the level of 500, and then I sell this stock again, so that you buy some shares here and that you sell some shares here. But the other aspect, of course, is that we use options to get this directly income stream. Yeah, and here's one of the magic slides, one of the magic summaries why we are benefiting that much when using options. So as already mentioned, and I think you already understood, we are getting a directly paid income. Options are turning the wheel around, which means we are not having a cash outflow, we are having a cash inflow. That's why we are benefiting from. And the second one is here, what second problem we are solving at the stock market, that even if we were not right with rising shares, we can win either way, even if the share price is falling slightly. So here we are having the FedEx share, FedEx Corporation, a quite big transportation company. And here you can see that we got a buy signal. And here you see what we are doing, that we sell, the red line here is selling an option. So we sold an option at the level of 230, where the stock price was at 265, I think, approx, when we opened this position. So we set approx 15%, I think, lower than the current share price. We have done our homework. We've seen that the FedEx share is currently now having any rumors, any bad news that are going around, that are lingering around, where we do not know how this can affect the share price. And we've done our work in using our technical indicator, which was showing a buy signal, which means that we are not expecting heavily falling prices. So now, as you can see, we sold our insurance here, where we've got directly paid income for. This one here was approx $100 just for one position. Of course, we could also sum this up to 2, 3, or even more positions to generate more income. And in this case, we win in 4 out of 5 market conditions, which means it's now okay that the FedEx price is going heavily up, or that the share price is going slightly up, or even that it's going sideways, we win. Or even, that is what I meant at the beginning, we also win when it's even falling. So we expect rising FedEx shares, but we even win if the share price is going slightly down, because our protection only starts here. It only starts at the level of 230, which means, yeah, we sold an insurance, but the risk downwards to this 230 is on the shareholder, and we are not part of the game. And the same is with other insurances. For instance, a car insurance, you always have this own risk. Or also with a health insurance, I have this in the Netherlands, you have this own risk, and up to this own risk, it is your turn to pay for this. And here we have the same. So that's why we can even benefit when the share price is falling. And here you also always see our reinsurance. So this is something, the red one is where we sold our insurance, and the green one is where we bought the insurance, which means that our risk is only within these in this range. So in this ratio, which we can define ourselves. So you can define yourself, do I want to have a risk of $200? Do I want to have a risk of $500? Am I fine with a risk of $1,000? So of course, the bigger the risk, the more your income, because you can define this fully yourself. And there are also strategies where you work without this protection, without this green line. But the strategies that I train my community is that we really always have this protection, because this protection is there day and night, also over weekends, which is not given by a stop loss. A stop loss, what a lot of people think can protect me. A stop loss can only protect you when the markets are open. But if the markets are closed, like right now in the US, something could happen in the economy or with the stock, and the stop loss is not working. Our option is working every time. So that is why this green line here, this protection, is protecting us right now. And here you see on the right side a classic directional trade, where you of course can only benefit if the stock price is going upwards heavily or slightly up. And of course, if it's just going sideways like it was going here, you are not benefiting, and of course also the other lines. So you are only benefiting in 2 out of 5 directions in the classical trade. Also, when you short a position, it needs then to fall heavily or to fall slightly. But in all the other directions, you are losing or not making profits. And here we are benefiting in 4 out of 5 market directions. You also see this here. So you can, of course, also take screenshots. I think this one here is also giving the best summary. What this means for options, what this means for our protected strategy, that we benefit in 4 out of 5 market conditions and in 4 out of 5 direction scenarios. Yeah, and here you can see what we can also do with the sell signal. So also what we've opened recently with the first shares, because we've seen the first sell signals also in the current market condition. And here you can see the same functionality, just downwards. So here you see a sell signal in the S&P 500. It was the 15th of December last year. The 18th of December was a Fed meeting where the stock prices were falling up to 3%. Our signal came even before, even if this had nothing to do with this Fed event, but of course we were benefiting from it. And yeah, here then the only way where we are not benefiting is when the stock prices would move up heavily, and all the other directions also downwards, we are benefiting. Yeah, here you can see an insight out of my journal. Of course, you can also take screenshots. This was in February and March 2025, so this year, where we also had the first indications for falling prices. And that's where we trade a strategy which is called bear call. So this is a bearish position. This is exactly what I showed you here, that we sell an option, which is in red, and that we buy our protection above that, so that if the share price is going up heavily, our risk is just between these 2 lines. So this was a bearish position. And for instance, let's quickly pick this company here, which is Marriott. So for the Marriott company, the current share price was at $285. And we said that this is not exceeding $300. So it should move more than 5% up. 5% for the Marriott company. It's a hotel. It's a lot. It's not a tech company, which is super wild or super volatile. For Marriott, it is quite a lot. And we said, opened on the 14th of February, that this is valid for approx 1 month. So this was now here for 35 days, and we got for this premium here, Prämie in German, we got $134 for that. So here in this line, you can see all the directly paid incomes that we got. Also here for gold and for silver, we got even more. And this, of course, is summing up, and you just need to indicate, do we have now a buy signal? Do we have a sell signal? Do I know this company that I can give a prediction for the next 4 to 6 weeks, for instance? And in that sense, you are selling a protected strategy, which is then going on for the next weeks. You do not need to interfere. You can also put directly your take profit, your stop loss into the system. We do this with interactive brokers, like also WH Selfinvest is offering. So in that sense, all this is doable, and you can transform this and act like this. And what is also super important, you can see here this area, this column, which is the margin requirement. So what is required to keep this position open and ongoing? And for Marriott, it was here 805 euros that we put behind, that you put as a margin requirement, or that the broker is asking for to keep this position alive. So you are not investing this into something. This is just blocked on your account. So you can think about this when you go into a hotel, that there is a deposit that is asked for from the hotel. And this deposit is then held on your credit card, but you do not pay this. So it's just it's just blocked on your card. And the same is happening here, that whenever you hold a margin requirement, or that the broker is holding a margin requirement, that this is blocked on your account. And you can not act with this for further positions, for further options that you want to open, but it remains on your account. And this is also not your risk. Your risk, as mentioned, you can define yourself. You can also lower this. You can, open this more up. And now I quickly get, thanks a lot, Eva Maria. And now I get a sparkling wine, because I'm currently here in Germany for the birthday of my mother-in-law. And there is this saying of this 11 o'clock Zug. And in that sense, I just got a sparkling wine, of course, without alcohol. And yeah, cheers. Thanks a lot, Eva Maria. So just that you know, yeah, what's going on around me. All right, so that is the required margin, and we calculate then our profit when taking the required margin, because that is something that we put as a required amount that is blocked on our account, on our portfolio, in relation to the premium that we got to put down our return. So the rendite, the return, is now here for Mary at 15%, just for this protected position. And in the end, we closed the position already before the expiration of this position happened. So we do not need to hold this insurance until the end, until the 21st of March. But we can always say, whenever our position is currently running, that we want to close this, that we want to go out of our insurance case, and then we go out in this position in the unrealized profit or the unrealized loss, wherever we are currently. And then we always give a bit of the insurance premium that we previously got back. But in the end, of course, we took then the risk out, and we had the chance to generate an unrealized profit, even if we do not need to wait until the end. All right, that is something you can also, of course, take a screenshot from about my statistics in 2024. So I opened 550 trades. I opened 550 positions, so which means approx 10 options every week. Of course, I do this as a professional one, and I also make a living out of that. There's no need for you to do so, but I just wanted to show you that this is also proof. And last year I had a profit probability of 90%, so 9 out of 10 positions ended in a profit. The average profit was then 114 euros, approx 10% landed in a loss. And here you then also see that the loss is higher than the profit, which means it's always important to keep the loss positions, of course, low, and then also the loss value low. And here you see then how I come to my expected value. So every time when I open an option position, I have a positive value behind, which means per contract from which I can also open 2 or 3 or 4 positions at the same time, I have an expected positive value. So this is a positive game of 63 euros when calculating my probabilities and my average profit and loss numbers in, so that you see that this statistic is definitely profitable, or also the strategy is profitable. Yeah, I quickly skip over this, depot insight of participants, because I also wanted to show you in the remaining minutes one of my real money accounts where it's the same here. Here you just see some of the current positions that we are having open from BlackRock, for instance, one of the biggest share investment fund companies, where we had a buy signal here recently, where you then see that the price was going up. Or here Snowflake, one in the cloud sector, was also recently going up, and we were selling options and buying the protection. And as I now have the chance to go directly into the tool and also translated it to English in the tool, I want to use the time to directly jump with you in one of my real money accounts, which you should be able to see now. Is it working?
Yes, we see your screen.
Perfect. Thanks a lot for confirming. So here you can see one of my real money accounts on Interactive Brokers. So the same that you can access to with WH Selfinvest. And here you can then see currently the net liquidity, which is approx 60K, which is the net amount which is in this portfolio. Here you then can see all the positions that are expiring on the 20th of June. So the 20th of June is now the deadline where these options are expiring. And let us start with one position that is here, for instance, Adobe. I think one company that is well known, and you always see here the cost basis. Every time when somebody spots my portfolio, spots my depots, see, of course, wow, here a large number of negative numbers. Of course, it looks negative, but it is all the premium that we received. It is all the basis because we sold something. We sold now an option for $138, which was directly paid to our account, and we sold something for a high price. And our intention is that the option is not required so that we can buy this back for a way lower price. So we received the cost basis $138. And here you can see the unrealized P&L, which is green. We have $104 already on our side. 75% is already on our side from the money that we ultimately got, so that the market value of the option is just $34 remaining. So we sold this for 138, 104 on our side, 34 remaining. So we can just now, when the stock market is opening, we could just decide we give the $34 back, which is the remaining value of the option, and just makes a profit of 104. And we do never need to wait to the 20th of June, which is almost one full month, and can every time close this position already in profit. Or here with SAP, with a bearish position, if we say, hey, this is already 62% against us, I don't believe in that any longer, I could also finish this at the weekend and in this afternoon, and just close the position with this loss which is currently here. So we never need to wait until the expiration on the 20th of June. Yeah, I think that is this what I wanted to share. Also feel free, of course, to take a screenshot. If you are somebody who is recognizing and exploding opportunities, who is somebody who say, hey, I'm ready for change. I wanted to create something more in life. I understood that I want to build up something that is generating me more directly paid income, and also to gain more financial freedom, for instance, to reduce the working days from 5 to 4, or define that you want to have the chance to give more to others, or to give more freedom or more benefits to your life. And you also can think of the shortcut from an experienced mentor. I was doing this now for approx 10 years, and also for 3 years approx after leaving the household company Miele for living. You can, of course, scan this QR code. You are fully free to book a free potential call with me. So behind this QR code, you can find my calendar, which you can also find on my website on markusherfert.com, Markus with a K. And then we can definitely talk about where you are currently standing, where you wanted to go, what is your potential, or what is your goal to achieve in future, not only at the stock market, but also privately. How can the monthly paid or directly paid income from option benefit your private plans? Happy to talk. It's fully free. You can find all the available slots behind this QR code. And then I would say maybe a few more minutes for 1 or 2 questions.
Yes, thank you, Markus. It was a super interesting presentation, also very clearly explained. I see indeed that there were some questions. The first one is a starter in options. What is the best way to start? Is it directly with the combinations of the different options, or can he buy just one option linked to a stock?
Yeah, so the most people are starting with just selling a put option below the current stock price. But from my perspective, that is one of the biggest risk positions that you can open, because you do not know how much the stock price is falling and you are not protected, not overnight and not at all. Other trainers would then say, just do this with positions that you also can imagine to buy, because that is the agreement that you give, that if the stock price is going below this threshold that you opened, you are in the position that you have the obligation to buy the shares from the other party, because you gave the protection. And this, of course, then at the level above where the market price of the share could currently be. And the difference between is, of course, then your risk. So in that sense, I'm not a friend of trading not hedged. I always wanted to sell an option and then to buy a protection, which is also helping the broker me with, because then the margin requirement is way less.
Okay, top. Then another question that I'm seeing here is that, are you sometimes combining long-term options and short-term options in your option strategy?
Yes, so there are also super interesting strategies to buy options. Also, what is super interesting, that you can benefit from the volatility. So there are almost no laws at the stock market, but there are some laws, and one is that the volatility is always increasing before important events. And one of these important events could be such a Fed meeting when Jerome Powell is talking about the interest rate adjustments, or that you have these earnings reports from companies. There's always insecurity moving into the shares, and which means that the volatility is increasing, and this volatility you can also trade with options. So when you sell an option, you benefit when the volatility is crashing down, and when you buy options, you are benefiting when the volatility is going into a share and then also into the option. And then you can benefit from price moves and also from volatility moves. So there are also strategies. Yes.
Okay. And then I see one last question here, that in the beginning you talked about, okay, I know, or for the Apple stocks, I know that Apple, or I suppose that Apple is going to increase in the short run. Do you always do a technical analysis based on the stocks, or do you always need to know a little bit more about the company that you're trading in?
Great question. So it is really a combination. I always build this on technical analysis. So I have this own indicator that I'm using. I can also just super quickly jump into it, where you can see here, for instance, trading view. So that's the indicator for where it's coded. So that you can see here a sell signal on the 12th of December. Ideally, then the stock price is going down. Then you can see here Adobe, ideally it's going up. And then here we had this earnings event, where you then a lot of times have this gap where we don't want to join. We don't want to be into a position when this earnings event is happening. And then we had here on the 17th of April another buy signal. And then we are selling, and then we are buying our options. And Adobe was also the example where we made $138 of directly paid income. But of course, there are more, like here, Interactive Brokers, where you had the sell signal, where you had a sell signal. This buy signal here was interfered by the tariffs, where we had here the 4th and the 7th of April. And then it was going up again, and we sold here our positions. So we always build this on technical analysis. But secondly, also, I am a fan of knowing what company is behind. So we do not need to know fundamentals, because this doesn't matter for 4 to 6 weeks where we are invested. But we should know, as mentioned, is there currently rumors about Apple that could affect the company heavily, and then also the stock price. Or currently with Meta, that there are these lawsuits that Meta should sell Instagram, for instance. This could, of course, have a heavy impact on the stock price. And also, if this happens quickly, of course, we always trade protected, but still, we don't want to run into situations that we do not want.
Okay. This was it for the questions. I got a lot of thank you for the presentation, very nice presentation. So the people liked it very much. Didn't bother them that it was in English, so very nice.
Nice.
Yeah, and then yeah, a great birthday party for your mother-in-law today.
Thanks a lot.
Okay, I will take over the presentation again. Okay.
Thanks a lot. It was my pleasure.
You're welcome.
Have fun, everybody. Have a good time.
Bye-bye.
Bye.
Dus nu zullen jullie terug mijn scherm moeten zien. Dus eerst en vooral ja, hartelijk bedankt aan Markus. Willen jullie ook graag beleggen hoe hij belegt? En hij belegt via de multi-marktrekening. Die heeft zeer veel mogelijkheden, zeer veel markten, zeer veel beurzen in één rekening. Dus u kan perfect met één rekening opties treden, aandelen treden, futures treden. Dus dat is echt het grote voordeel van deze rekening. U kan die zeer makkelijk openen via deze grote QR-code. Mijn collega Arash Azad, die ook later in deze Boel en Bear een presentatie zal voor zorgen, is de multi-markt-expert. Dus als u graag extra uitleg wilt van hem over deze rekening, boek dan zeker een Calendly in met hem. Via deze QR-code kan je die inplannen en hij zal u dan opbellen.